Hi, everyone. Thank you so much for being here with us tonight virtually. My name is Hannah Levintova. I'm a student in the class of 2021 here at CBS. I'm also a reporter at Mother Jones, where I've covered politics. I'm thrilled to be moderating tonight's panel about the implications of the 2020 presidential election with these three distinguished CBS professors. I'm going to quickly introduce each of them. Professor Glenn Hubbard is an economist and a specialist in public finance who served as our dean here at CBS until 2019, and before that held positions with the U.S. Treasury Department and with the Council of Economic Advisors. Professor Tano Santos is also an economist and who teaches value investing here at CBS. And Professor Ray Horton is a political scientist, professor emeritus of ethics and corporate governance, and has published widely on municipal finance and public and nonprofit management. This semester, these three professors are co-teaching a popular CBS elective called Modern Political Economy. The class gets into some of the big questions that we're going to be talking about here today, questions that are at the nexus of politics and economics. So with that, let's jump in. I want to start with a few questions that get at the pandemic and the COVID economy that President-elect Biden will inherit. Biden's acceptance speech on Saturday night made clear that his administration's tone on the coronavirus is going to be different than that of the Trump White House. He promised a plan built on, quote, bedrock science, and on Monday unveiled a 13-person coronavirus task force staffed with 10 doctors. But his approach to the pandemic is still months away. Meanwhile, coronavirus case numbers are surging across the country. The possibility of more lockdowns looms, and Congress has yet to pass a stimulus package. So my question is, when it comes to the pandemic economy, should we be hopeful or should we be cynical about our short-term economic future? And Professor Hubbard, let's start with you.
Well, great, thanks. Thanks, Hannah. And I do think this question really tees up some of the themes of economics, politics, and business that Ray and Tano and I are bringing to class. And then we'd be excited to share more of that with anybody. To your question, everybody's talking about letters of the alphabet, V and W and the dreaded L or maybe a K. You know, I think basically you need to start with science and the virus. And so if we think that the path toward recovery means that lockdowns could be modest or smarter, that is in sectors or age groups or parts of the country that have the greatest potential risk with better contact tracing and testing, then I'm relatively optimistic. I actually think the size fiscal package that's needed for support is on the order of $1 trillion. And that's a huge amount of money. But it's a lot less than the CARES Act, which was almost 3 times that. And I think it's passable, even if we have a Republican Senate and a Democratic president. I'm also somewhat optimistic in the sense that unlike the last recession, you're not going into this with a financial sector that's in trouble, household balance sheets that are decimated, excessive investment. You're not seeing any of that. In fact, there's a fair amount of pent-up demand. So I think if we get it right on policy and on tone, and especially on science and the virus, we'll get out of this over the next year.
Professors Hubbard or Santos, do you all have anything that you want to add?
Yeah, so I think if I can abound on some of the things that Glenn was saying, I think the President-elect Biden is going to face a challenge in what concerns the pandemic. He has a choice, given that we have good news about the vaccine. It's coming at some point next year, say late spring, early fall, and he's going to have to make a decision on how does he want to meet this challenge immediately. Should we wait until we have a vaccine and perhaps have a heavy-handed approach towards the lockdown in order to minimize the cases that are going to occur? Otherwise, the economic costs of such a strategy, of course, are enormous. Are we going to actually implement a strategy of protecting groups that are at risk, seniors, people with pre-existing conditions that are relevant to the COVID virus and so on and so forth. So from the very beginning, he will have to make a choice on how he wants to deal with the next few months of the pandemic until the vaccine becomes widely available to the population. And actually, I think the choice here is quite stark, which is on the one hand, it is reasonable to say, well, let's make sure we minimize the number of cases because a vaccine is coming our way. But that, of course, may mean that the economic costs are enormous if we pursue yet again a policy of extensive lockdowns, or do we implement a more fine-tuned policy of protecting at-risk groups so we can maintain economic activity while minimizing cases while we wait for the vaccine. But that, of course, is something that to some extent we haven't tried yet, and we haven't seen many cases of this working. So it's going to be a very interesting first take on by President-elect Biden on this crisis.
So
I don't have anything to add, Hannah. My economist friends have taken care of this question. I'm happy as
Great.
a
Well, we'll I'm sure we'll have lots later with with your perspective, Professor Horton. I do want to, there's a question in the Q&A box that I think is relevant to this, which asks, are we taking it as a given that Trump will concede, and what happens if he doesn't? So can you speak briefly about the economic and political implications of what could shape up to be a chaotic transfer of power?
Hannah, I think this is largely noise. The president must understand that elections are 0-1 outcomes. You win or you lose. And at the end of the day, that's what it's about. And he has lost, and he will or won't concede. But the fact of his loss is there. Where the rubber meets the road are two areas. One is mechanical. It's about funding for the transition. But there too, I remember in 2000 operating on the Bush transition team when it was uncertain for a while who was the next president. We just plowed ahead, and I assume Vice President Gore did too. So I think that's solvable. The bigger issue is whether the failure to concede creates a political kerfuffle among the president's supporters, and that's an issue. But I think President-elect Vice President Biden is playing it right by simply saying, let's be patient and wait till January 20th.
Let's jump into the next question. So on the question of the pandemic economy and what awaits Vice President-elect Biden, how would you compare the challenges with which Obama came into the presidency with those that Biden is coming in with? So a number of economists have drawn parallels between the pandemic economy that President-elect Biden will inherit and the Great Recession economy that President Obama inherited in 2009. So can you comment on that comparison? Is it a fair one? And are there lessons from that crisis that translate to this one? And Professor Santos, let's start with you.
Yeah, so I'll take this one. So in this, I'm going to sound a little bit gloomy because I actually think the situation is worse than it was for President Obama when he took over during the global financial crisis. And the reasons, I think, have to do with something subtle. So let me just stick to economics, and then I will make a point about politics. So the economics of the global financial crisis were quite clear from the very beginning. The problem was well identified. As Glenn was saying just a minute ago, there was a problem of losses in the financial sector amongst banks and investment banks, and there was a problem that the U.S. households were over-levered. So the problem was well diagnosed from the very beginning, and I don't want to minimize the political economy problems associated with solving those two problems, but at least you had a well-diagnosed problem, and now the solution was how to actually get capital in the financial service sector, how we're going to recapitalize banks and so on and so forth, and how we're going to be providing some form of relief to over-levered households. Once TARP was approved and the stress tests underway, it was very clear that at least the financial situation would be stabilized. And you can almost see it in the market. At the moment the New York Fed starts performing the stress test, the market comes down, credit spreads start narrowing, and so on and so forth. In the case of households, there were some programs put in place. Glenn actually made a very interesting proposal early on in the crisis on how to actually provide some relief for the households. I think here the lesson would be that if you're going to do something, let's do it big. At the end of the day, President Obama, for reasons that perhaps thought the political costs were too high, was a bit timid. He could have gone bigger and be more aggressive, both in the magnitude of the financial stimulus, but also of the mortgage modification program that was put in place through HAMP. In the case of the current crisis, Hannah, the problem is that kind of the losses associated with COVID are widespread in the economy. Whereas they were very concentrated in a few financial institutions during the global financial crisis. So the problem that we have is that we have a myriad of small businesses here and there that have suffered enormous losses on account of the pandemic. We're helping them by extending loans. By the way, the take on the mainstream lending facility the Fed set up with backing from the Treasury has been pitifully low. But it's not the right way of helping small and medium-sized businesses because it's going to saddle them with additional debt when we want to put instead equity. So, and in any case, helping small businesses is a difficult thing to do. It requires the collaboration of the financial service sector for smaller community banks and so on and so forth. And, it's a much heavier task than the one the President Obama faced during the global financial crisis. And the second point, just to mention the obvious, is that President Obama had a unified government. So however enormous the global financial crisis was, at least we had the Senate, Congress, and the presidency and the control of the Democratic Party. We can use the levers of power without too much horse trading, and as a result of these, we can make things happen fast. This is not the case here. It seems to me very clear that the Senate is going to remain in the hands of the Republican Party, and Mr. Biden, of course, is a seasoned politician. He's been at this for 50 years. By all accounts, he gets along well with Leader McConnell, so perhaps he will be able to pull some magic, and I'm equally optimistic as Glenn was that perhaps a big stimulus check will come once the Georgia race is behind us. But these two are big differences with respect to the crisis. Dispersed losses, much more difficult to provide relief relative to the global financial crisis. Divided government, unlike the one that President Obama had during the global financial crisis.
Hannah, can I add two quick things? Because I think Tana makes great points, and I just wanted to pick up on two of them. One about small and mid-sized businesses. This is a very big point, both in economics and political economy. So the economics problem is we now have an under-equitized small and mid-sized business sector. You can't start a venture fund for small and mid-sized businesses. An upside is just the normal return. It doesn't work. It's not like a venture fund. You're either going to have public subsidies, or you're going to have to use programs like Main Street in the Fed or the Paycheck Protection Program to mimic equity. We don't need to get into the weeds unless questions want to, but honestly, the Fed is not doing a very good job there, at least in my view. There's an important political economy angle to that. If you have small and mid-sized businesses fail in droves, while large businesses in the financial sector are maintained okay, you will have the same pressure as you had with homeowners in 2008 of people saying, look, I played by the rules and I effectively was treated badly. And we know that didn't end well political economy-wise. The second is about policy. I agree with Tano that there's a big lesson to be bold. I remember in the Obama administration, the economists at the time used the phrase targeted, timely, and temporary. And it was a great piece of alliteration, and it was 100% wrong. And it was 100% wrong because it didn't recognize the long-term damage and the need to reset expectations. That's the task facing Biden too, and he's going to need to reset those expectations.
So, I have a lot of questions, and I don't know that I'll get to all of them, but a number of them have asked you to sort of weigh in on the how do we solve this part of this. So in asking the question, I asked, are there lessons from how that crisis was handled that can translate to this one? So can we dig into that a little bit? And I just want to add to it, a couple of people have asked sort of what should a stimulus include or not include if you had the power to just snap your fingers and give us a stimulus. So would love to have you weigh in on that.
Well, I can start if you like. I put out a paper this summer with Tim Geithner, so we're on different sides of the aisle, different points of view, but came together to say a stimulus package needed to focus where the demand doom loop was a problem. So that would be aid to states that have been left behind and cutting public education that we know we need more of to train people for the economy that is coming and evolving. We need to continue our support of the unemployed. Just because we have a falling unemployment rate, there's still 10 million people out of work. This is still a problem that we've got to solve. And then to the point we were having earlier, we need more for small and mid-sized businesses. About $1 trillion would do that, along with the monetary policy that the Fed is following.
Yeah.
Please, Professor Santos.
No, go ahead. No, it will come up again. Go ahead.
So let's dig in more into some of the domestic political economy questions after Trump. So President Trump's time in office was different, and it was marked by xenophobia, climate denial, racism, and heavy doses of misinformation. But last week, more than 70 million Americans voted for that vision of America. Trump lost, but his popularity is undeniable. Is President Trump's enduring popularity and the rise of populism in the US a function of economics, culture, or something else? Professor Horton, it would be great if you could start us off.
Well, I think of it as there being three different tranches that ultimately comprise the Trump base in 2015. One is a group of people who, in a sense, got screwed by the American economy in the period after 1975. They've gotten used to the post-World War II economy where they enjoyed rising wages and increased benefits and their families' lifestyles improved, but that all began to turn around in the mid-70s. And it introduced an era of over 40 years where wages stagnated and inequality increased. And this got worse as you move through time. It was bad in the last quarter of the 20th century. It got worse in the first 15 years or so of the 21st century. Think about a displaced worker in Youngstown, Ohio, as being a kind of a prototypical example of a group of people in that tranche. There's a second group of people in that tranche that aren't there because of economic misery. They're there because their sense of culture is being challenged on a variety of fronts. And that also began to happen in the second part, the last quarter of the 20th century. And it continued into the 21st century, magnified by social media. Those are issues having to do with race, ethnicity, gender, sexual preference, whatever. But people who are used to a standard set of American values were under attack from a variety of perspectives during that period. The third variable, I think, is what you'd call political, and Tano touched on it earlier in one of his answers. The truth of the matter is, by the early part of the 21st century, Washington was a swamp. It was so divided politically by the time Obama was well into his first term that it couldn't get anything done. And so I think there's a whole set of people who were aggrieved to some extent by their economic station in life, who were aggrieved by challenges to their value system, who by 2015 had given up on the American political system. To me, those are the three tranches of people that provide the basis for Trump's victory. And all they needed to really get going was a strong man to set him off. And I guess another way of putting it is, I see it as a long time coming. And as I think the election evidence from last week suggests it's going to be a long time going away. There's a huge divide, and it's not going to work its way out in the near future.
Yeah, can I pick up on that, Hannah?
Please.
Because I think Ray is 100% right. Patrick Buchanan had Trump's lines. Go back to the 1992 campaign, the anti-trade, anti-immigrant, America First language, even Make America Great Again. It's all in Buchanan's speeches. I don't know whether President Trump read those speeches or not, but the rhetoric is very much the same. The difference for Buchanan was that not enough Americans fell into the buckets that Ray identified to make Buchanan anything more of a nuisance for then President George H.W. Bush. But that shifted over time. So to me, the question is not whether 70 some odd million people voted for Donald Trump. That's not how I see it. I mean, mechanically, that's what they did. But I think they were thinking about Trumpism. I think many of those voters might question the character of the president. It would be really about what his policies or worldview stood for. And I think the answer there is, unless and until we deal with some of the issues that Ray raised, unless and until we deal with the fact that not everybody in the country can participate in the economy on equal terms, or if a lot of people feel looked down on by others, that's just a recipe for disaster. And I think, sadly, whatever happens with President Trump, the Trumpism that he stands for is very much a feature of the American electorate until we get to those problems. And that is a huge implication for everybody in this audience thinking about business.
I want to add a small point about what Ray and Glenn were saying. And I think bringing Patrick Buchanan's candidacy to the presidency is right on, because it precedes all this talk of the effects of globalization. And there's one powerful force that is affecting the American economy, and that's led to an enormous amount of displacement, the death of an entire sector, which is automatization, and what it has done to the manufacturing sector in the United States, but also in many other advanced manufacturing sectors, countries around the world. And in a way, one way you can think about the type of conundrum that we have, the type of paralysis that we have, is that the institutions that we set after the Second World War to provide insurance to our workers were of a cyclical nature. Sometimes the economy does poorly, sometimes it does well. I'll give you some unemployment insurance, I will extend this type of assistance, and so on and so forth, but they are poorly suited for the type of shocks we have experienced over the last 30, 40 years that are related to technological adoption, automatization. It's not the first time we experience them, but they produce a lot of societal distress as a result. They require much more imaginative policies. They require the type of assistance in terms of education and so on that Glenn was mentioning just a moment ago. And of course, that is bound to create an enormous amount of political debate because it requires action. It requires doing something different than the type of institutions you have set up in place to absorb what were before temporary shocks, and now they look like permanent features of the system, like automatization and some of the forces of globalization.
To follow up, professors, and I hope to get at a few of the audience questions that have been coming in. Professor Hubbard, you mentioned that what was attractive to many people was Trumpism, in part because people couldn't participate in the economy in an equal way. So as we're looking at the COVID economy and the current economic crisis, what did that mean for Trumpism? Does that mean that this is fertile ground for it to continue?
It definitely
see as the
does
future?
mean that. And that was one of the concerns I expressed earlier about small and mid-sized businesses. The way I think, and I think Tano just put it incredibly well, there's two issues in stitching people to the economy. One I think of as just preparation. So when Adam Smith talked about competition, if Adam Smith were alive today, I expect he would talk also about the ability to compete in the economy. In Smith's day, these were all simple jobs he was talking about. That's not the world we live in now. So preparation is going to be very important. Some people, like all Columbia Business School students, are incredibly prepared to compete in the productive economy. Not all Americans are, and they know it. The second I would think of is reconnection. Tano mentioned what economists would call social insurance, and our programs were designed for transitory losses. We're talking about quasi-permanent losses. Like, I worked in an industry for 30 years and now my skills aren't worth much. What are you going to do for me? That is a complicated problem that needs answers. And so I think that the pandemic is only heightening that for people. And I expect this to be a big issue. So this preparation and reconnection are a problem. The country has dealt with it before. We've had American presidents who've taken major initiatives in both of those areas. So it's not like we don't know what to do, but we're not doing it.
One of the challenges there, Glenn, is that you can think about policy initiatives that would begin to get at the economic problems that a lot of Americans are facing. It's hard for me to think about policy initiatives that deal with the kind of cultural wars that are going on. That's to me, that's the real difficult problem facing us. Assuming, of course, that we could even pass legislation that would deal with the economic issues. It's the cultural issues that, to me, are the most enduring and most challenging.
I agree, Ray, but I would make 2 points. One is in the recent book that Bob Putnam, the Harvard political scientist, wrote. It was Bowling Alone was his famous first book. This book is called Upswing. Talks about a period, obviously since 1960, we've seen a decline in social participation. That's part of what you're talking about, Ray. But we also saw a big upswing before that. So the Gilded Age looked like today, a period of these declining social and cultural factors, but we saw an upswing. And I'm not sure we all know what happened. We know what kind of organizations were responsible, but there's no single father of that victory. A second sort of hat tip I would give is to my teacher, Ben Friedman, who wrote in a book, The Moral Consequences of Economic Growth, that there are always cultural problems, racism, anti-Semitism that lurk below the surface. The prosperous, fast-growing economies tend to mask those. Slow-growing pockets in the economy tend to bring them up. So culture is important. I'm just not sure it's divorceable from economics.
Yeah, but
again, I'm an economist.
Remember that the culture wars intensified during the period of the 1990s when America was experiencing its most rapid economic growth in decades.
But that's not where the Buchanan voters came from. They came from a different...
Buchanan's argument was cultural. If you go back to that speech in 1992, he made one reference to economic problems of Americans. The rest was all culture.
But it didn't go anywhere.
Right. The base got built up after Patrick Buchanan.
Let's use the segue. Professor Hubbard, you mentioned business school students being, prepared to enter the economy. So let's talk about business students and business leaders, since we are at CBS after all. So it's appropriate that we ask about the role that businesses and business leaders can play, for instance, on restoring some of the political norms that were shed during the previous administration, or in solving some of the political and economic problems that you all have touched on. So what are your thoughts on this, on what role business leaders can play? And specifically, it would be great if you could comment on what role tech companies can play.
Well, it's a great question, Hannah. I think one thing business people have to do is walk around, get out more. Right now, many of our business leaders live in a bubble of other like-minded people. One reason Ray and I took a whole bunch of Columbia students to Youngstown, trips that Bruce Usher and Todd Jick have continued to this day, is because we didn't want Columbia Business School students just having white wine and shrimp toast with people from London or Shanghai. Why not actually talk to the heartland of America? So the first thing is actually talking. The second is an attitude. I think many people think of elite business school students, like CBS students, as being anywheres. So you could be in London or Paris or Hong Kong or Johannesburg, it doesn't really matter. But most real people, average people, are somewheres. They live somewhere. Their family is somewhere. And every business is also somewhere. So I think a challenge for business leaders, whether you're Jamie Dimon running the Business Roundtable or a mid-sized business leader, is to imagine yourself as a somewhere as well as in anywhere. So for our students and business leaders they'll become, it's more a matter of investing in people and communities, not out of a sense of charity, but out of a sense of what it means to be a good business person. Go back and look at business people you've admired over time, and I think you'll find that to a person, they have done exactly that.
So can I add a comment about this as well, about the future, the long run future, not the immediate future? So I think in the immediate future, we're going to see a deepening of this automatization wave, and that's going to be introducing an enormous amount of societal distress all over again when we're able to implement AI-like technology and start displacing white-collar jobs, not just blue-collar jobs attached to manufacturing, by white-collar jobs as well. And there we're going to have to, have a conversation as to the pace of the adoption of this technology and the displacement this is going to result into as a result. I want to make a point about, I want to connect a little bit. I'm not so sure of what I want to say, but let me try it nonetheless. If you have a state that is paralyzed or ineffective, the business sector will have a bigger role to actually lead debates and discussions in particular areas. We've seen this in some countries such as Italy, where the state has been ineffective or inefficient, but where at the same time you had a relatively vibrant corporate sector that was trying its best to actually kind of substitute for the inefficiencies of the state. And we all know that Italy has a great entrepreneurial tradition. The inefficiencies of the Italian state notwithstanding, but there's a limit to that. There's a limit to that. At some point, the state can be an enormous stone around your neck that really sinks you. So you need a minimally functioning state to have a functioning economy as well. If not, one fears that we may end up with a state that is putting a brake on the progress of the American economy as a result.
So to follow up on both of your points, you've done a great job making the case for why business should be involved. And Professor Hubbard, like you talked about, becoming more aware and getting out and not, literally or figuratively eating shrimp. But can you be a little bit more concrete about the specifics of what businesses and business leaders should be doing to help solve political and economic problems, right? Businesses hold enormous political power, enormous financial power. What should they be doing? How should they be spending their money? What should their priorities be? Should they be lobbying for things? I would love to hear some more specifics about what they should be doing.
Well, that's you hit it right on the head right off the bat, Hannah, when you said they should be lobbying for different things. They should be lobbying less for crony capitalism and lobbying more for some basic American reforms, both in the political and economic system. I think Tano is absolutely right. Given the long-term problems facing the American national government, there are really only two sectors that can sort of step up and play a bigger role. One is the nonprofit sector, and it's undernourished, but the business sector has substantial resources. And it is by force of nature, it's going to have to change its role in the years coming ahead. It no longer can perform a sort of a narrow, we want to make as much money as possible sense of purpose. Like it or not, it's going to be forced into a more substantial social role.
Yeah, Hannah, I agree with what Ray just said. We talked in our class that Milton Friedman famously jumped into this debate 50 years ago this year, talking about the business of business. And he was reacting to a time where, once again, people were asking business to do things beyond its ken. And his argument is that's inefficient and will produce a lower social surplus for everybody. He had some exceptions, but that's by and large his story. The reason I think Ray's argument is more potent is because we cannot take social support for the system as given. Friedman was taking as given that we socially supported market capitalism. The question is who does what? I do not take that as given, especially in the current environment. You asked very specifically what could be done. I would break it up into local and national. So at the local level, businesses need to be involved in training and education. There are examples of these all over the country, and they're not eleemosynary as much as they are businesses trying to help themselves develop talent. When Columbia Business School students were in Decatur, Alabama, we looked at exactly one such set of ideas. The city of Pittsburgh has been a pioneer in this, of bringing business leaders together to do it. So you have to be local. For national, you have to stick to issues that cut across business. So historically, a divided Congress struggled and the business community pushed the Marshall Plan over the line. The Business Roundtable today is stepping up on police reform. That's not something I would have thought they would do 10 years ago, but I'm glad they're doing it now. So I think they're both local and national specifics that can be done, but it does require the mindset Ray mentioned of thinking of a bigger stage.
Let's switch a little bit. There have been some questions in the Q&A box about China. So I'm going to ask you about that. President Trump's policies on trade intensified U.S. tensions with China, the United States' biggest trading partner and one of the world's most powerful economies. So what does a Biden administration mean for the U.S.-China economic relationship and for American companies doing business with China? And Professor Santos, it would be great if you could start us off.
So, I mean, this is a very important question in the American political economy. I think this is, by the way, one area of President Trump's policies where he has been most successful. He has completely shifted the debate, and I think it's going to be very difficult to go back to the type of policies we had in the past in what concerns China. He has changed even the viewpoint of the establishment of the Democratic Party. And even though I think the tone is going to change, it's going to be less confrontational, I think fundamentally the policy of bargaining hard with China is going to remain under the Biden administration. I think it's important to ask oneself why. And I think the perception is, and I think is very widespread, that this type of approach we designed in the 90s of designing or allowing China into the neoliberal institutions such as the WTO has worked great for China, but it hasn't worked that great for the American worker. That's the perception. So in a sense, Neil Ferguson, the great Stanford historian, talks of Chimerica. Well, the perception is this close connection between the United States and China hasn't been to the US benefit. And as a result of that, we're going to try to do certain things to rebalance the economic relation we have with China. But now, if I want to add 2 points to this, because I think it's, as a foreigner in this country, it's absolutely wonderful to hear how Americans talk about their relation with China. So first, I would like to know exactly what the policy objective is in our relations with China. Okay, China is a phenomenon, is there, it's not going anywhere. It's a very different challenge than the one the Soviet Union posed to the United States because it's not an expansion, it's not trying to export anything. So in that sense, the policy of containment that we had with the Soviet Union doesn't seem the right response to China. Accommodation seems an option if that's where we want to go with China. And most importantly, and this is, I think, what is driving the American policy elites a little bit crazy about China. And this is, I think, the fundamental thing to understand about our relations with China, in my view, which is the following. Time is on China's side. They only need to wait. The relative power between the United States and China is changing in China's favor. China is going to become wealthier, more prosperous, more powerful as a result. And, as a result of that, they will start thinking about achieving whatever strategic objectives they want to achieve in the world. And we're going to have to face a decision on how we have to manage this aspect of China naturally becoming relatively more powerful than we are on account of the simple arithmetics of growth and the sheer size of China. So if I can bring my small country of Spain into the discussion, there are two ways you can manage your changes in your relative power vis-a-vis other powers. You can follow the British model of painful accommodation, or you can follow the Spanish model when the Spanish Empire was under stress in the early 17th century of throwing everything to try to undo these powerful trends working against you. It ended up very poorly for Spain. But, this issue of managing, these changes in relative power and the role of time is, I think, at the heart of our kind of disconnect with China. China, by the way, has been looming large in Western policymakers' imagination for hundreds of years. And it's always been there. Most of the wealth throughout history has been concentrated in China. And what we're seeing to some extent is a reversion to the mean. So nothing new. It's basically we've been through 250 years where the West took over and accumulated wealth well above historical norms. And now we're seeing a rebalancing on that score. And how to process that, I think, is the challenge that the American policy establishment is having problems coming to terms with.
I think that's just a brilliant piece of analysis, Tano.
Oh, thanks. So that's it. We can all go home now.
I think President Trump actually probably deserves more policy credit than people might imagine for calling China out. The problem is there's a difference between a doctor giving a correct diagnosis and a doctor giving a correct treatment. And a correct treatment would have been a strategy I'll come back to, but also the idea of bringing one's allies like the European Union, Canada, Japan, Australia together with China. I'm a little less bullish on China than Tano. What he says may be true, but I think the jury's very much out. The Chinese do not have a financial system and set of institutions that are built for that economic future. So it might happen, but it also might not. Where I think Tano is most powerful is arguing for strategy and objective. I think of Tano as writing the same long telegram that was written by George Kennan in a different era in a different country. The Tano telegram asking for a strategy. You could be very narrow, like China shouldn't steal intellectual property, but I think a bigger issue is what are the two countries' place in the world? And I would think that the US should focus its strategic interest there first at home. How do we get our own growth up? How do we become the research powerhouse again? How do we deal with the political economy problems we're talking about? If China wants to have a Made in China 2025 strategy, that's their right. Where's ours?
I couldn't agree more.
Agreed.
Speaking of domestic economic growth, let's talk briefly about financial regulations, specifically taxes. There have been some questions in the Q&A box, so I'll try and get at them. So the Trump administration passed corporate tax cuts by way of the Tax Cuts and Jobs Act and changed a number of Wall Street reform rules that were enacted with an eye towards preventing a repeat of the 2008 financial crisis and the bailout that came after. So what is the impact of these changes on the business environment and on our economy? And what changes in policy might we expect from the Biden administration? A few question askers have mentioned that the markets seem quite sure that the tax cuts will not change. So what's the impact of the tax cuts and what changes can we expect?
Well, I can grab that one, Hannah. I think that the Tax Cut and Jobs Act is little bit of a mishmash. The core of it that economists have talked about for a long time was corporate tax reform, both the US statutory rate and the way we tax multinational corporations. There have been a lot of work in recent years by economists, including myself, on what economists would call the incidence of the corporation income tax, who bears it, with a view that workers bear more of it than earlier research might have thought. So the tax is pro-growth. The tax cut would be pro-growth, pro-worker. The problem with looking at it is that right after the president signed the Tax Cut and Jobs Act, he threw up a lot of trade uncertainty. So you have two variables going in different directions for firms. It's very hard to know. On financial regulation, I think we left a bit of a mess. I do not think Dodd-Frank cleaned everything up, not even close to it. And if you look at where holes are now in financial regulation, we had to have the Federal Reserve intervene massively in the Treasury market, not markets for some obscure security, in the market for US Treasuries, not just during the COVID panic, but before last fall, meaning we've got problems in market depth and liquidity. Some of those trace to regulation. We have a number of concentration risks in the financial sector. I think the way we approached this after Dodd-Frank of having the Financial Stability Oversight Council could be much improved on. It's probably the subject for another day, given all that you want to talk about. But I don't think it's fair to say that we had it right. And then it's not really the Trump administration, it'll be the Federal Reserve that's been doing the regulatory changes are getting it wrong. I think the truth is somewhere in between.
Can I add one point on the political economy of finance and treasury interventions? I think Glenn is spot on these issues of the plumbing of the financial system that lead to more Federal Reserve interventions to stabilize market, as we saw, I think it was in March, Glenn, or in April, to stabilize the treasury market, which is something remarkable, given that it's the most liquid market in the world. I think want to point out this phenomenal role that the Federal Reserve has in being the supply of dollars of last resort with respect to the rest of the world, which I think is an underappreciated role for the Federal Reserve, and that connects to international political economy issues. So one of the institutions that comes out of the global financial crisis are these swaps between the central banks, which the Federal Reserve makes dollars available to other central banks around the world, such as the European Central Bank or the Bank of Japan, in an effort to stabilize the supply of dollars around the world, because is the invoicing currency of choice all over the place. There's one central bank with which we don't have a swap line, which is, of course, the People's Banks of China, which is a big player in international commodity markets and so on and so forth. And many of the things that we're going to see in the next few years is precisely this way of getting dollars effectively to China through interventions in the treasury market to make sure that the dollar market doesn't get too much out of whack as the world hoards dollars every time there's a crisis. I think it's going to be an interesting story in the next few years.
We've gotten a couple of questions in the Q&A box that's related, I think, where folks are asking about the national debt. What are the long-term implications of the debt given COVID spending? Another person asked if we should be concerned about the debt.
I think we should be, and we're absolutely not going to do anything about it. And I'll explain both of those. So the should be actually starts with more of a qualification. I'm not so worried about the borrowing that was done during the pandemic and might continue to be done as long as it's spent effectively. I think of it as like fighting a war. And if you fight a war, you fight it, and then afterwards you make an adjustment. We're not fighting it against an overseas adversary. It's against something you can't even see called a virus, but it's nonetheless a war. And after wars, we tend to grow faster, we reduce our spending, and that's the way we bring the debt to GDP ratio back in line. I'm more worried about the structural problems. We were running $1 trillion budget deficit before COVID hit, and the economy was doing well. it wasn't a recession. And we have looming structural problems from primarily old age programs, Social Security and Medicare, that are way out of whack. And it's not so much that they're going to push the US into a fiscal crisis. I suppose that's possible. It's more like a slowly boiling frog that it changes everything else. Our ability to do the things the American people think government does. I used to tell politicians that unfunded liabilities of big programs were XDX trillion dollars, they would strangle the country, and eyes always glazed over. When I talk about it with leaders today, I tend to say to them, look, today, not some present value calculation, today, your decisions are constrained. You can't be as ambitious about educating kids, defending the country, combating climate change, whatever your initiative is, because we're becoming a country of interest payments and entitlement payments. There is no bigger problem domestically for young people today than getting their arms around it, or it absolutely will strangle them. But we're not going to do anything about it.
Well, on that slightly pessimistic note, I want to ask Professor Horton, because I know that this is something you've lectured about in the class and written about as well, is the future, more broadly, our economic future, our political future. Are you optimistic or are you pessimistic?
No, I'm pretty pessimistic right now, and we've touched on, one way or the other, most of the reasons. We have a lot of headwinds. We have a divided society. We have a paralyzed political system. We have an economy that it will bounce back, but whether it bounces back with the kind of vigor that we used to have in the 1990s and the early part of the 21st century is an open question. Plus we're in as Tano so rightly pointed out, we're in a different international situation now. That we're not going to be able to use the international system for our benefit in the way we used to. But let me say this. One of the things I've learned over the years in teaching this course is that when things are going really well, you tend to miss some things that are lurking under the surface. When things are going really badly, maybe you tend to miss some things that are lurking under the surface too. One of the things that's clearly lurking under the surface that we never talk about is demography. It's not that demography is destiny, but the changing demographics of the United States will, in my view, help the United States going forward. Secondly, is a point we talked about earlier, and that is the sector with the resources to really step up and make me feel at least a lot less pessimistic about the future is the business community. And that, I think, it requires some things that we touched on a little bit earlier, and that is, hopefully our current and our future business leaders have a somewhat broader sense of the societal responsibilities of the firm. And the other thing that, I almost hate to say it, but the other thing that gives me a little bit of optimism is that we might come up with a new model of political economy. I think we're very dragged down by older models that in the long run didn't succeed. The Keynesian post-World War II model didn't work. The neoliberal model that followed didn't work. We're in a populist model right now that I think worries us a lot. But out of all of this, I think there may be the possibility of rethinking how we want to organize the relationship between our government, our state, and our market. So I'm a little pessimistic, but I think there are some things lurking around that we need to pay more attention to and that make me feel a little more optimistic, at least.
Related to some of what you spoke about and also our tax discussion earlier, I want to try to answer a few more listener questions. So one person asks, would it not make sense for Biden to increase taxes on those who have benefited from the globalized economy to help those who have been the losers of it?
Yes, and it's hard. So basically, Nicholas Kaldor, a great economist, argued for the word compensation. His view was when you have a policy change like trade or technological advance that makes society as a whole better off, but that some lose, the way to make that politically sustainable is to have the gainers compensate the losers. And by that, Calder didn't mean that a successful person writes a check to an unsuccessful person. He meant that the system needed to do that, less as a matter of redistribution, but more as a matter of reconnecting people to the economy. So yes, that should happen. It's hard to do because in a sense, what you'd like to do is say, let's see the people who have done well pay more, but we already have a very progressive tax system as it is. There are arguments that people who have gotten richer in recent years because of, let's say, Federal Reserve actions or things like that, that's something surely you could tax, but how? So I think the first thing is really just accepting the notion that we need to do more for people left behind. And frankly, that will be politically and probably should be economically paid for by people who are more well-to-do.
I mean, how to get that message across the policy establishment is the challenge, right? The acceptance that, you know, this particular crisis, because it is a crisis in the sense that, you know, to quote Gramsci, the old is dying and the new hasn't quite arrived just yet, requires action, right? I mean, it requires policy initiative. And going back to something that Ray has mentioned, what is striking about not just the US political environment, but many other countries are facing and experiencing a very similar condition, how little gets done is simply surprising. How little gets done. That's the thing that is worrisome. What is going to take to unclock this? Is it a bigger crisis? Is it, it's difficult to know.
Well, if we're waiting for crises, we have this thing called climate change staring us in the face that we haven't touched on tonight.
Do you want to touch on it? Yeah.
No.
No.
Why didn't climate
I'm
change?
pessimistic enough.
I think
Well,
climate change is difficult for this conversation. I think it is one of the problems, first order problems the world has to face.
Yeah,
It's something
absolutely.
I've worked on, many people have a long, long time. Having said that, it's akin to a cancer, not a heart attack. So some policy problems are a crisis like a heart attack, a military strike, a terrorist event, a quick pandemic that hits. It's easier to manage mobilization. If you're talking about the insolvency of Social Security that I mentioned, or the crisis of climate change, that's like a cancer. It's very deadly. It will take a while, and gradual action is needed. But gradual action tends to be hard in the policy process. So I hope that President-elect Biden will focus there. I think there are things he could do right away in technology and research that can be done. But I think climate change is hard politically, not because we don't know what needs to be done, but it's hard to mobilize consensus.
Can I add one point to that, just to emphasize the political economy aspects of some of these problems beyond climate change, as Glenn was talking about, which is, we were discussing with the students the other day the fascinating case of the reforms of labor markets, the welfare state in Germany. The party that implemented those reforms was never voted again into power. So the lesson to many other European political parties on the left, the party that implemented those reforms was the Socialist Democratic Party in Germany, the SPD, was if you do these reforms, if you tackle these big problems and introduce better design institutions to make them more sustainable in the long run, you never get voted in again. And I think this is an enormous challenge. I think politically this is going to take not only good ideas, but good traditional political leadership of someone who is able to sell to the electorate these more structural reforms that are needed to make our system sustainable in the long run. And that political leadership is one thing, doesn't seem to be out there for the time being.
So, other than kind of getting past those enormous political roadblocks that you just described, the other big question for climate change, for any of the other economic and political problems you've just raised, is how do you pay for it? So as our last question, I want to throw in a question that a few people have asked, which is, what are your thoughts on modern monetary theory as a way to pay for some of this?
I think it's crazy, probably the way the questioner might have meant it. If you mean, is there some coordination in principle between a central bank and a treasury? That's true as a matter of arithmetic. There's only one balance sheet, it's the taxpayers, and we can call it different things. So in that sense, it goes on. For example, right now in the pandemics, the Fed authorized the Treasury authorized the central bank, the Fed, to take on some credit risk. The part of modern monetary theory that's silly is the notion that you can just continue to use inflationary finance, and Congress, in its wisdom, despite all that Ray said about it tonight, will somehow wake up when it needs to and quelch any problems. I just think is fanciful. So I think this is a bad idea whose time has come.
Yeah. So I want to add to this. I want to emphasize what a bad idea this is. And we've been here before. And what is interesting is that these crazy monetary ideas always come up in times of crisis. That's what is one interesting thing about can we print our way out of this mess? It always comes up in times of distress, of societal crisis, of populist uprising. There's a deep connection for reasons that are mysterious to me, and I've thought a lot about these issues, about populism and money. And they keep coming up, popping up left and right, and it always ends in tears. And by the way, there are papers written about this, trying to understand how much can you pay with the inflation tax. Not a lot. It's not going to solve the deep structural problems that Glenn was referring to just a moment ago. They're not. You cannot raise that much through the inflation tax.
I suppose you could think about rearranging some of our fiscal priorities as opposed to relying on too much debt financing. We do spend a lot of money on military right now, and we probably have less need than ever before to spend that much money on military. So there are places in the federal budget where you could make substantial savings that could be directed or redirected to quite noble purposes.
So can I say one thing about this that worries me to no end, Ray? And I want to bring back the thing of China and bring a historical episode, which is I'm terribly worried that one day the United States may be challenged, not militarily, not directly, but challenged in the sense that perhaps the Chinese are going to build a big navy and we're going to be forced to match them and to compete with them and to keep a pace with them. This is exactly what happened between England or the United Kingdom and Germany in the period before the First World War. It's an incredibly dangerous development. It goes back to this point of accommodation that I was talking about just a moment ago, and it has very profound financial and fiscal implications.
Agreed.
So I worry that someone may play on us the game that we played on the Soviet Union. We're going to outspend you, and you're going to bankrupt yourself trying to match us. Can someone like China play that game on us?
Yeah, it's for that reason. I don't think military spending is the right source of funds for the quote noble purposes. I think it really is in the entitlement programs. I understand how unpopular that statement is, but that, like Willie Sutton would have said, is where the money is.
Well, on that note, we are 5 minutes over our end time, so I think we need to wrap it up, even though I would love to hear more from all of you about where to find the money to solve all the problems. So thank you to all three of you for answering all of these questions. I wish we could have gotten to all of the audience questions. There were so many good ones. Yeah, thank you so much.
Thank you, Hannah.
Thank you. Thanks,
Thank you, Hannah.
All right.
Thank you, everyone. Thank you.
Thanks.
Take care.